Sales have a little bit left in the tank, especially as we move into the fourth quarter. Americans are buying at the very tip of their budget, with the average cost of vehicles being about $37,000 in 2019. But as we move into the fourth quarter of the year, interest rates are going to be as low as they've ever been for the year. It should get shoppers out there, it should get them reinterested in the market, a tried and true method to push sales.
Incentives are, but that's usually a sign of desperation, right?
A little bit, but it's also to move some outgoing inventory. Sales this year aren't as high as they were in years past, but we should be looking at sales of about 17 million. Should be the fifth straight year where the industry hits that mark, something that has never done in its history.
Talk to us about Ford a little bit. Fords were standout, but not in a good way. Vehicle sales down. We know Ford is de-emphasizing vehicles, but their F-150 was down as well, and I believe their SUV sales were lower also. Correct me if I'm wrong. Where does this put Ford?
So Ford's in a transition period right now. They don't have the new truck that GM and Ram both have. It's staying with the aging F-150 platform, so that's certainly one cause for the decline. But also the Explorer and the Escape are going to be brand new, but they just haven't hit the market just yet. So they are trickling into dealership lots, but it's not something that's out there in mass. Once they do hit the dealership lots in full, sales should rebound, and Ford should be in much better shape.
Phil, help us understand the 17 million mark that is going to be record-setting if we achieve it this year. Right. What kind of economic backdrop do we need to have in order for those forecasts, you think, to hold true? I mean, what are the analysts saying in terms of what they're expecting, what they need to see in the context of the U.S. economy in order to get to 17.1?
The biggest indicator is consumer confidence, Melissa. Melissa, the biggest indicator is consumer confidence. If you see that fall off, then it's likely that you're going to see auto sales drop. They generally move in lockstep with each other. And really, when you're looking at the new vehicles that are out there, people are, while these prices are going up, and I know Kelly mentioned this journal article about 7-year loans, you still have a lot of people who are saying, wow, this is a great time to buy, given the fact that we have the interest rates, given the fact that if I don't want to buy new, there's a great selection on the used side. We're just not seeing people who are saying it's not a good time to buy a new car.
So, Phil, quick thought here. When and how does the GM strike start to affect sales, or has it already?
Not so far. We've been tracking those numbers. It hasn't, because the dealers have plenty of inventory. And Tyler, I've said this from the beginning. They've got enough inventory where they're fine for 4 or 5 weeks. Then you would start to see people say, I don't have the vehicle that I'm looking for at this particular dealership. And even then, Tyler, keep in mind, if you're looking for a Chevy Silverado, you're a Chevy guy. And you know that the strike will eventually end. And you'll say, okay, well, I'll put it off for a month or two.